What's up, world? Michael EJ here, coming to you with another video in the field of finance, business, and life. Now, I'd like to start a series for this coming month, just at the end, and I will actually call it EOMMP. End of month momentum picks. You guys know I love momentum. It's my favorite investment strategy, mainly because usually you have a higher hit rate versus any other strategy, and if you're using short-term momentum like I am, you can actually see how well you're doing 1 month, 3 months, 6 months out, instead of having to wait until the market comes your way. Things like you're thinking. You already see what the market's thinking, and you just hop on the bandwagon, hop back off, and keep it moving. So with that, I got 3 stocks that you might like, and you can be a judge of after 1 month and 3 months. It's the best way to look at some of these picks. So with that, let's get started. So the first pick I like, ENTG, Integris, $5 billion market cap. Now, rough description of what they do. They are a leading global developer, manufacturer, and supplier of micro-contamination control products, specialty chemicals, and advanced materials handling solutions for manufacturing processes in the semiconductor as well as high technology industries. In a nutshell, they kind of help deal with waste and problems in high-tech industries. It's kind of interesting. In a way, they feel like a materials company, but high-tech, very high-tech. I mean, next level, they are in that kind of space. So keep that in mind. Now, why is the momentum there? Momentum in the short term really comes from sentiment, but I'm looking for justified momentum. So I need the fundamentals to clearly be in my face and point me in the right direction. So for Integris, we got sales are increasing, but more importantly, profit growth is growing exponentially. And the reason it's growing exponentially is because of operating leverage. There's a lot of set assets in place. A lot of, I would say, maybe a little bit more of a fixed cost structure with Integris. That kind of allows for operating leverage to take place. We have sales growing and profit, and costs just don't keep up. Also, a big part is the intangible assets. We're always looking for intangible assets. In the case for Integris, those intangible assets are strong relationships with their customer base as well as proprietary technology to churn out solutions. And they have a growing returns on invested capital. Very important. Now from the sentiment terms. First off, they're an information technology sector. I'm just going to say that right off the bat. That is very important. That no matter what happens, that sector just continues to rise faster and faster than the stock market. If you want to make a bet of just investing in an ETF technology and bet that for the next 10 years, I bet you that beat the stock market. That's where all the businesses are going because they have very high returns on investment, kind of like Integris here. Now, part of that is also a lot of institutional investors have recognized the company. 98% institutional ownership, which in the short term is good. Long term, short term really good. And there's management confidence. Company specific. If the management themselves, if they're going out and saying we're going to increase our own expectations, how can the market not? It usually takes some confidence in your company's ability to perform, to project it out to the market. So, valuing the company, they look pretty good, especially intrinsically, using the DCF, mainly based on higher profitability on the free cash flow basis. That's what really comes with higher intangible assets. You don't have to spend as much money to bring more money in. From multiples, I like to look at price to sales. They're a little high. They're about at 3.5 times sales. Not terrible, but definitely higher than the market average. So that's one thing to keep in mind, but I like the company. Also remember, higher sales multiples usually are correlated with higher margins. So with that high of a margin, they are doing pretty well, and it matches up with the multiple. So that's number one. Now, number two stock we're going to look at is just a single A as the stock ticker. Agilent Technologies. Actually in healthcare, the sector has been struggling as of late, kind of lagging S&P 500, but this company definitely adds some diversification. And it's kind of a safety net. Now, Agilent is a global leader in life sciences, diagnostics, applied chemical markets, providing application-focused solutions that includes instruments, software, services, and consumables all across the laboratory workflow. They are really focused on helping labs be more productive. That's kind of their stick. That's what they're focused on. Now, fundamentals standpoint, they're growing sales faster than expected, which is very good. Very good. They're growing even faster than they're expecting, and even companies themselves are increasing expectations. That's interesting in itself, because companies usually don't do that, like I mentioned before with Integris, so keep that in mind. Also, they have very strong relationships, have some intellectual property. They don't really talk about it that much, which kind of bothers me because I actually look for it. But nevertheless, they have it. Sentiment is very, like I mentioned before, very company specific, mainly because of the confidence in management. So you gotta look for that. 89% institutional ownership. So the reason ownership is important is because it kind of protects against the downside. Most institutional owners, they're not looking to sell very quickly. Although that might, you just look at the number by itself might not be enough. You gotta look deeper to who's owning it, but we'll just take the number right now and just take that. So on a valuation standpoint, they're fairly valued. They're fairly valued today. And I mean, when you're looking at the price to sales multiple, it's at 5 times. Kind of high. Especially since their margins may be slightly higher than Integris. So that's a little bit dangerous. But then again, we're in momentum here. Valuation kind of doesn't drive it. Well, drives it to an extent. But hey, if we're just going to hold it for 1 to 2, maybe 3 months, this might be alright. Definitely a good play here. Now, third, AEIS, Advanced Energy Industries, about a $4 billion market cap. Kind of interesting, also in technology, and they design, manufacture, sell, and support precision products, power products that transform electrical power into various usable forms, operating in the semiconductor and industrial power capital markets. Very interesting, trying to create power however it may be. Now, fundamentally speaking, apparently they're in a niche market. They have a very high return on invested capital. I mean, it is up there. I mean, especially once you make some adjustments, make some accounting, change some things accounting-wise, you'll see the company is doing pretty well. Definitely doing pretty well. And intellectual property, lots of it. It's growing. A lot of their intellectual property is growing. Also, a growing backlog, which is very good because you can see the sales coming forward. It's very important, very underrated, the backlog of companies, if they have one, if it's important to them. So they have that going, and that is what's really pushing free cash flow growth. Very important, which is why the company, similar to Integris, looks really good on an intrinsic standpoint. When you have growing free cash flow or higher margins in general, then yeah, it just comes over to free cash flow, and it makes the company look really good from a DCF standpoint. I mentioned that in the past that, hey, if you're fine with that, that's good. And intrinsically, that makes Advanced Energy Industries look even better. They're not the greatest at that price to sales. They're at 6 times. Now, they have a very higher here. They have the highest free cash flow margin. But man, 6 times is up there. I mean, they're in, like I mentioned before, they're in technology, so you got some really good like momentum already there in the entire sector, which is very important. And I mean, at the same time, I mean, growth and backlog, once again, company specific, very important. I mean, it works. It works. Now, it's scary a little bit, I mean, in terms of that valuation on a multiple standpoint, but especially here and here, I'll definitely not even just hold it short term because it looks so good intrinsically. I wouldn't even mind holding it long term. So just keep that in mind. I mean, even if the multiple is kind of out of whack, you need to always understand why so. And looking at price to sales, because the margins are so high, I can understand why, and I still feel confident investing in these companies. So that's all I have for today. Remember, with the end of the month momentum picks, these are stocks you can look at over the next month, next couple of months, and can judge. See if I really have, if I'm really doing what I need to be doing. Am I beating the market? That's what it's all about to me. And taking this momentum strategy, looking short term, I think I can. A little bit of a different take, but hey, you can't beat the market unless you're different than the market, right? So with that in mind, pay attention to these three stocks. Look at them over the next couple of weeks and months. We'll talk about later if I'm really doing what I say I want to do, which is beat the market. And we'll just go from there. My name is Michael EJ, bringing different views on the stock market, bringing different views in finance, bringing different views in business, and bringing different views in life. So, until next time, watch these three stocks, and I'll see you soon. Peace.